Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about economic data, how that impacts the markets with a little market analysis, and then finally wrap that up with a little geopolitical fodder that we could round off that analysis with. All right, so without further ado, let's get on with the markets. Something I didn't get an opportunity to talk about yesterday was a couple of the economic data that came out, and consumer confidence coming in a little bit lower than expected, which was what we talked about. Consumer confidence coming in lower than expected. New home sales really missing, coming in at 590,000 yesterday. We do get existing home sales or pending home sales today. I don't expect that number to be very good. But what we have been seeing are some really surprising numbers coming out of the Richmond Fed manufacturing. That came in at 0, expected to be a negative 13. Now, I thought that was just going to be a one-off, if you will. But then when we come into today, we got the core durable goods numbers. We got durable goods and preliminary wholesale inventories. So wholesale inventory is a little bit higher than expected there, which is a bit surprising after we've seen the durable goods numbers. That number comes in at 1.9, expected to be a negative 0.5. So they really knocked that number out of the park. All right. Now, remember, durable goods are anything that we would purchase that would last longer than 3 years. So they're hard goods, usually like refrigerators, cars, airplanes. Now, how many airplanes are you and I buying? Not too many, but that comes in with the ex-defense spending. So defense spending goes in there as well. That number, ex-defense, was even up nicely at, I think, 0.5% better. Core durable goods, when we rip out those transportation items, airplanes, cars, that number actually still comes in a little bit stronger at 0.3%, expected to be 0.2%. So when you strip out the cars, automobiles, transportation, looks like people are still buying those hard goods, but the transportation items really jacking that number up nicely. Another thing we've got coming out later, like I said, is pending home sales and wholesale inventory, crude oil inventories. The big number we're going to be keeping our eyes on is the Fed funds rate. I don't think that they're going to raise that by 1% at this point, especially with the numbers that we've been getting out recently with the home sales. That's going to start being the first shoe that drops on the slowing. So I think that they'll be a little bit more cautious right now, coming in at 75 basis points today. So raising the interest rates to 2.5%. Other than that, it would take something pretty major throughout the day to get that number to really jack up. And I do not think pending home sales is going to come in that great. So that said, I think it gives a little bit of room for the Fed to hold off on a 100 basis point move or a 1 percentage point move. And now when I was talking about this yesterday, Fed fund futures being a one lot. Now, if they raise it by 100 basis points, that's $4,000 for every one lot. All right. So that is a big move. I tried to explain how large of a move that is monetarily speaking yesterday. So Fed fund futures moving at these types of clips is major moving of money back and forth for these banks. So it is major implications, I should say, on the price there. All right, so let's get on with the markets. We've got crude oil. Yesterday, we were looking like we were finding a bottom, but the continuation pattern here is actually pretty good. Now, we did get some strong manufacturing numbers out of the Richmond Fed. Durable goods numbers pretty darn decent. So that is going to be a driver of the demand for crude oil. And remember, we talked about this time and time again, the demand for crude oil. Oh, see, look at this. I finally think I figured something out here yesterday. I think if I try and figure out my pin here, I don't know. I have to play around with it too much for this to end up working, I guess. Anyway, let's just close that out. All right. No pen for today until I figure that thing out, but it looks like more of a continuation pattern here in the markets for crude oil. Now, bonds continue to climb higher while the interest rates for Fed funds are expected to be raised again today. So when we're talking about rising interest rates, that means the price of these bonds should be going down. But right now we're looking at price of bonds going up. This is that whole flip paradigm on the inverting yield curve where the shorter term interest rates are higher than the longer term. That signals that the Fed is going to be overdoing this interest rate hike here. So bonds continuing to buck that trend there. Gold futures still haven't really found a bid. I would not say that this is a V shape, although if I was, trading gold, I've stayed away from it. I've been talking about getting into this. This is probably a really good level to get in and out of gold. Right here at 1680, let's call it. That's where the tweezer bottoms basically happen. So anything below that would be a breakdown on this pattern there. So if you're looking to play gold to the upside, that's got a pretty solid bottom for folks on that one. I'm going to stay away from Bitcoin. It's right at a point of control, and there's just not enough chatter about Bitcoin to get that market really moving at this point. VIX is starting to climb a little bit. Despite the fact that we're getting a little reprieve here with the markets yesterday. Look at that. We were talking about this yesterday in the markets, that we'd come down, test that 50-day simple moving average, and hopefully repel away from that for a bullish move. And that's looking like what we're getting here. Markets shaping up with the economic data that we've been getting. Pretty decent, not really as bad as I was expecting. Microsoft, though, did come out with earnings yesterday after the close. Now that I'm kind of piecing today's data with some of the earnings that we've been getting. And Microsoft actually signaled that they were a little concerned with the sales of PCs. Well, that durable goods number, transportation items, came in a little bit better than expected, and was noted in that data point that it was due to computers a lot of times there. So is it going straight to Apple, or are people kind of going straight to the phones rather than to a home computer necessarily? So, because a phone, although you and I probably break them on a weekly basis, they are expected to last more than 3 years, believe it or not. So we've got NASDAQ moving a little bit higher here. Again, Dow Jones Industrial Average making that test of the 200-day yesterday, or 50-day simple moving average yesterday, came up a little bit short, where E-mini S&Ps did tag that number and created a nice little bottom here. We need to get a little confirmation today, a little bit of move to the upside. I think we get a 100 basis point move, this market could panic a little bit. So I think a 75 is what's in the docket there. Overnight inventory, pretty flat. No real moves even off of this durable goods numbers, which I would have expected to get us a little bit of move to the upside. We had that Richmond manufacturing number came in a little bit better to a surprise. This durable goods number, I don't think anybody was expecting it to come in this high and knock it out of the park like that. Wholesale inventories, we may not have mentioned that, but wholesale inventories did rise a little bit. Usually people think that that's a bad sign here in the summer, but geez, I would have not expected to be increasing inventories or trying to ramp up that here in the summer. But obviously they see the demand coming through on the manufacturing side from the PMI numbers. Those purchasing managers probably seeing this demand for durable goods to knock it out of the park like we did. So that a lot of levers and pulleys happening there in the markets. And I wanted to talk about Microsoft a little bit later, but jumped the gun. Here is the earnings. They missed on their earnings, and we're starting to see that market sell off. A bit surprising after seeing today's number. And we go to Boeing. Boeing is off by about $5 right now here on their earnings. Now they missed on the headline and the bottom line, and what happens? They look like they are doing all right. Why? Because they have free cash flow, and that was something that was going to be a bit of a surprise for the street. So they're not really selling off as bad as one would expect from missing on those earnings. Like we've seen some folks get really beat up, especially the airlines, at least recently, have been getting beat up. Boeing actually, not only did they miss on these numbers, the unions are talking about going on a strike. I never really understood that in bad times, why folks go on strike when a company is hurting. They don't have a whole lot of leverage, which is kind of what Boeing's been going through as of recently with all of their headwinds with airplanes and everything else. So, and this economy can't be helping. That's all I got, guys. Still looking, holding on to my positions. IBM, Las Vegas Sands, the reopened trade that's still not reopening, still looking to add a couple more opportunities. Throw it over there in the chat window, what you're looking at, what you want me to check out. I'll take a look at it for sure. All right. So that's all I got for you guys. I hope you have a great day. Don't forget, 2.5% today. Can't take that. Take it easy.